The volume of trade between Nigeria and China increased by 34.7% to $15.48 billion between January and July 2025, compared to the same period in 2024. China's consul Yang Yongqing disclosed this during a reception to mark China's 76th founding anniversary and Nigeria's 65th anniversary and the Midterm Autumn Festival. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Ukeri. China's Consul General Yang Yongqing revealed that Nigeria is now China's second largest trading partner in Africa, attributed the growth in trade to the upgrade of bilateral relations to a comprehensive strategic partnership during the 2024 Forum on China-Africa Cooperation Summit. She emphasized that the cooperation in areas such as infrastructure, energy resources, trade, culture, and education has been expanding, delivering tangible benefits to both nations. The envoy noted that despite global economic challenges, China's economy remains resilient with a 5.3% GDP growth in the first half of 2025 and continued global leadership in innovation. She praised the Chinese community in Nigeria for their contribution to cultural exchange, development, and charity, urging them to act as a bridge builder to future strengthening ties. Yun King also pledged that the consult in Lagos will keep protecting the welfare of Chinese nationals and businesses in Nigeria while ensuring efficiency services. She called on the Chinese community to uphold unity, lawful business practice, and a play to active role in fostering China-Nigeria cooperation, which she described as being at its best stage in history with compromising prospects ahead. Nigeria has secured a major milestone in its digital trade transformation with the global registration of tax identification number and the approval of Federal Inland Revenue Service as the country's PEPL authority. The achievement made possible with the support of the Standard Organization of Nigeria, registered Nigeria Tax ID under ISO/IEC 6523 International Coding System, giving Nigerian individuals and businesses international recognition in cross-border transactions. PEPL, an international accepted framework for the secure and standardized exchange of electronic documents, is already in the use across Europe, Asia, and Australia. With FIRS as the Nigerian PEPL authority, Nigerian businesses can now integrate seamlessly into this network, allowing faster payments, reduce administrative costs, and improve global competitiveness. According to the FIRS, the move simplifies compliance for taxpayers and boosts confidence in Nigeria as an investment hub. Under the new framework, tax ID generates using the National Identification Number for individuals and Corporate Affairs Commission numbers for businesses will allow be international referenceable. The initiative also reduces duplication, administrative errors, and compliance burden by unifying tax IDs across federal and state level. In a further push, FIRS has launched the Merchant Buyer Solution (MBS) e-invoicing platform, which large taxpayers must integrate with by November 1, 2025, while medium and small businesses will follow in phases. Companies are urged to validate their tax IDs, update accounting system, and onboard promptly. FIRS added that the launch of the MBS is a significant step in simplifying tax administration, close compliance gap, and positioning Nigeria to meet global standard in taxation and cross-border trade. The National Pension Commission has increased the minimum capital requirement of pension fund administrators and pension fund custodian to 20 billion naira and 25 billion naira respectively, with a deadline of 31st of December 2026 to meet the new capital requirement. This was disclosed in the latest circular by the regulator, which was unveiled significant guideline through the past weeks as part of its Pension Revolution 2.0. The last review of the minimum capital requirement for PFA's businesses was in April 2021, when it was increased from 1 billion naira to 5 billion naira. Under the new directive, 3 categories were created, with Category A consisting of PFAs with assets under management of 500 billion naira and above, who are expected to have a minimum capital of 20 billion naira plus 1% of the AUM of 500 billion naira. Category B comprises PFAs with AUM below 500 billion naira, who must raise the capital base to 20 billion naira. Those in Category C are special purpose PFAs such as MPF Pension Limited, whose minimum capital was pegged at 30 billion naira, and the Nigerian University Pension Management Company, whose minimum capital was fixed at 20 billion naira. PENCOM added that the minimum capital requirement for the new PFA license shall be 20 billion naira with immediate effect. For the PFCs, the minimum capital requirement had not been reviewed since it was established at 2 billion naira in 2004. PENCOM revised the minimum capital requirement for licensed PFCs to be based on the shareholders' fund unpaid by losses, determined as follows: 20 billion naira plus 0.1% of assets under custody. Also, the minimum capital requirement for a new PFC license shall be 25 billion naira, which is effective immediately. Speaking on the rationale of the upward review, the director of the Surveillance Department, PENCOM Salem, A.M. Salem, who signed the circular, says the review is to enhance the financial stability and operational resilience and improve service delivery, as well as long-term visibility of the PFA and the PSCs. The capital requirement was reviewed in line with the global best practice, which ensures that capital is proportionate to the risk exposure of the pension fund operator. The new model aligned with the capital requirements with the pension assets under management and assets under custody of the PFAs and the PFCs respectively. Since the last review of the minimum capital requirement for PFAs business in 2021, the pension industry had witnessed significant changes in terms of geometric growth of the AUM and the complex operating environment, with microeconomic pressures requiring the deployment of the adequate capital. PFAs are therefore required to maintain adequate capital to sustain the achievement of the contributory pension scheme after 21 years of existence, supporting ongoing pension reform initiative aimed at positioning the Nigerian pension industry to respond to microeconomic pressures and deploy adequate resources to effectively fund operations, improve service delivery, and ensure long-term sustainability. The regulator also maintained that the revised capital requirements will be monitored by the Commission every 2 years based on the audited financial statement of the pension fund, and any shortfall shall be made up within 90 days. During the week, PENCOM announced the Pension Revolution 2.0, under which it is said will soon introduce the minimum pension guarantee to safeguard retirees' dignity and support a decent standard of living. Also, PENCOM has broadened pension investment option, adjusted risk limits, integrate ESG principles, and clarify regulatory definition to enhance diversification returns and long-term growth. Now, the new investment instruments include reverse repos, gold receipts, security lending, private placement, derivation, commodity-backed instruments, and agriculture investment fund. The federal government has secured a new funding commitment from the African Development Bank to scale up the second phase of the Special Agro-Industry Processing Zone (SAPS). The expansion will extend the program to 24 additional states, moving beyond the initial 7 states and the Federal Capital Territory. According to a statement by Stanley Nwokocha, Senior Special Assistant to the Vice President on Media and Communication, the pledge was made following Vice President Kashim Shettima's meeting with the AFDB President Dr. Sidi Autar in New York during the 80th United Nations General Assembly. Recall that the SAPS program was launched in October 2022 by then Vice President Yemi Osinbajo. He says the initiative has the potential to banish food insecurity, boost agricultural exports, and create millions of agro-industrial jobs within a decade. The first phase of SAPS covered Kano, Imo, Kaduna, Cross River, Kwara, Oyo, Ogun, and the Federal Capital Territory, with co-financing of $210 million from African Development Bank, $310 million from the Islamic Development Bank and IFAD, and a $18.05 million contribution from the Nigerian government, according to Osinbajo. The program was designed as a government-enabled but private sector-led initiative to attract large-scale investment into crop and livestock value chain. The zone were expected to reduce Nigerian food import bills, expand export earning, and provide sustainable jobs for women and youth while reviving stranded agro-industry assets across the country. However, the Vice President Kashim Shettima says Nigeria's goal is to transform its monoproduct economy by leveraging agriculture, especially for value-added exports. He reminded AFDB of the country's status as its largest shareholder with a portfolio exceeding $10 billion. The Vice President also stressed that Nigeria's youth population is eager to be integrated into a modern workforce, describing them as a resourceful and development-oriented. He urged the AFDB to broaden its scope beyond MSMEs into include support for innovation-driven enterprises, particularly in the digital economy. Responding, the AFDB President, Dr. Sidi Autar, pledged support for Nigeria and outlined his vision of the bank as a catalyst for African transformation. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, where we x-ray the Nigerian economy and the government policies. The Naira appreciated and stayed below 1,500 Naira per dollar threshold for 10 consecutive trading sessions at the official market. Data from the Central Bank of Nigeria indicates that the domestic currency had traded below 1,500 Naira per dollar threshold for the first time in over 6 months. On September 15, when it closed trading at 1,497 naira to a dollar. Since then, the naira has strengthened and closed Friday trading at 1,480 naira to a dollar. At a parallel market, the currency had recorded some positive sentiment too, as it appreciated 0.13% to an average of 1,510 naira to a dollar. Over the past weeks, an external reserve added another layer of supporting, rising to $42.23 billion from $42.03 billion, a 0.47% appreciation, which analysts says enhanced the Apex Bank's ability to manage supply-demand gaps and bolster confidence in the naira's near-term stability. Reviewing the performance of the naira in the past weeks, ICO Capital highlighted improved liquidity from the local participants, oil inflows, and offshore portfolio investors as providing the base for the continued rally of the currency. Early session opened actively with the bid largely matching available supply, anchoring trade around 1,492 naira to 1,495 naira to a dollar. Midweek tight demand and supply dynamics initiative pressured the market, pushing the rate to 1,498 naira to a dollar before improved local dollar flows and modest CBN intervention, which is estimated at $20 million across session. Towards the week close, liquidity conditions remained favorable as the FPI inflow sustained an offered market tone, driving the naira firmer into 1,471 naira to 1,148 to 1,487 naira to a dollar. It maintained that the recent stability in the FX market will be sustained in the near term as the CBN continues to fine-tune its policies alongside fiscal measures by the FGN aimed at supporting liquidity. Cowrie Asset Management Limited echoed similar sentiment, saying, looking ahead, the naira is expected to stay relatively stable across markets, supported by the stronger FX inflow, reserve build-up, and sustained CBN interventions. Meanwhile, experts have commended the decision of the Monetary Policy Committee of the CBN to cut the rate by 50 basis points, anticipating the measures will ease financing pressure on real sector and reinforcing stability in the FX market. The Nigerian Minister of State for Petroleum, Senator Enike Nlopobiri, says that Nigerian oil production rose to 1.8 million barrels per day from 1 million barrels per day, adding that the goal is to reach 2.5 million barrels per day, as American companies are already showing strong interest in investing in Nigerian oil blocks. Speaking at the inaugural Africa Energy Investment Summit held in New York recently, Senator Nlopobiri, during a panel session, underscores Africa's renewed confidence and the resurgence of the investment in the continent's energy sector, making a strong case for continued investment in fossil fuel in Africa. Nlopobiri noted that Africa must not be deceived into abandoning fossil fuel while the West continues to expand production. Still on the oil and gas, Nigerian exported premium motor spirits, popularly known as petrol, worth 307.54 billion naira in the second quarter of 2025, marking the first recorded shipment of the product after Dangote Petroleum Refinery came online. The breakthrough followed the commencement of the operation at the refinery, Africa's largest single-train refining complex. Data from the National Bureau of Statistics shows that petrol accounted for 1.63% of the Nigerian total exports in the quarter. This was remarkable shift for a country long dependent on imports due to the chronic dominance of state-owned refineries. No petrol exports were recorded in either the previous quarter or the same period in 2024. Analysis of the trade figure reveals that 85.83 billion naira, representing 23.1% of petrol exports, went to Africa. All of it was concentrated in West Africa, specifically within the Economic Community of West African States. The remaining 76.79% was shipped to destinations outside the continent, suggesting that markets in Asia and Middle East drove the refinery early sales. All right, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.